Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about my Diwali Bonanza picks for this year. And these are 5 very good mid and small cap companies that you can buy for the next 4 or 5 years and make good amount of money. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about the Diwali Bonanza picks, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And if you can pay $100 upfront, then you get 1 year access by paying for only 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join my YouTube membership. You get all the facilities of what Patreon members are getting, plus 4 live sessions exclusively for YouTube members that happens every month. So that's one every week on the weekend. The criteria for picking these stocks: these are established brands, strong managements, and diversified yet market leaders in their own space. Virtually no debt or very low debt without any pledging, and there is strong institutional holding in all of them. Return ratios are solid and numbers are there. There is 20, 30, 50% growth even in profitability in some of these companies. How to put the allocation? Well, you can do two of the three things. Probably either you can do one of the two things. So probably you can either buy these along with your large cap peers and probably have 10 companies, 5 these and 5 large cap companies. So that's a good allocation. Or you put 20% in each one of them if you're ready to take some risk. Have a, you can say, a stop loss of around 30 to 40% depending on your risk appetite, and this could give you, these companies can easily give you 25 to 30% CAGR growth over the next 4 or 5 years. Buy over the next 2 months in a staggered manner, and minimum hold around 12-15 months, but I would say hold for 3 to 4 years and it will perform, they will perform pretty well. So first in this list is of course LAURUS Labs. Now this has come down from the top of around 700, 730. It has come down appreciably to 480 because of subdued results this time around. But it is one of the fastest growing pharma companies, big in API, a top brand in API, and became very big over the last 15, 18 months. I've seen the stock go from 200, 250 all the way to 700, and now it's consolidating. There's strong FII investment and people are buying at lower levels, and has been growing above industry rates, has been growing around 20-25%, whereas industry peers or large caps are growing at 15-18% or so, or 12 to 15%. Remember that demand for APIs will only increase going forward because people and countries are getting age, means the age is increasing for people in many countries, especially in India and in Asia. So this will only increase because of the pandemic. People have become more health conscious, so things will only get better for pharmaceutical companies going forward. Market cap currently is around 27-28,000 crores. It could swell up to as high as 120,000 crores over the next 3-4 years. So it's a good, you can say, forex from here that I see in LAURUS Labs. The second in the list is Blue Star, and has come into the list many times, and it has been performing over the last 6 months. You need to understand that the business got especially impacted because of the pandemic, because the most of the you can say wrath of the pandemic happened during the summer season of 2020 and 2021. So hopefully next summer would be big, and that's why the stock is already performing during the festive season. I think next year and a year after, next 2 years could be very big for AC companies, especially like Blue Star or Voltas. This is trading at around 8-9 thousand crore market cap, so can easily be trading at 30-40 thousand crore market cap over the next you can say 4 or 5 years. So these are good levels to get in. Probably on declines to 850, 860 would be even better if it falls. So It is focused on providing white goods. So remember that it's not only a company that provides air conditioner, but they are providing water purifiers, AC purifiers, etc. An air purifier is something that is being used extensively nowadays in metro cities. It is a leader in commercial AC services in India, and they also manufacture air coolers, water coolers, central AC systems, commercial refrigerators, the large refrigerators that you see in many, you can say, grocery stores, etc. So Blue Star has presence in many segments, so it's not only an AC company, it has become a white goods company and producing decent numbers. So stock has done a very little over time, but over the last 2 3 months, 1 2 months, it has done well. For once, it is now breaking out from that 880 900 levels. It is, I believe it's going to do extremely well. It is just going under the radar, and people are not you can say aware of the move that it could give because of the kind of consolidation it has shown over the last 2 3 years, not just a few months. High institutional holding and demand again will surge in summer as things normalize. I think next summer could be extremely good for a company like Blue Star. I think it is set to be 3x in the next 4 5 years time. I think it's going to do extremely well. Third pick in my list is an interesting one. It is HIL, and this is a top building material company that provides a porcelain, cement, other kind of cements, and other building materials, concrete, etc. And it has presence all across India and abroad as well. It is a ACK Birla Group company, high reputation, and has been consolidated for the last 6 months. Last quarter results have not been that great, and that is why the stock has plummeted. Now, remember, this company has a very low float, so this is kind of a riskier company in that regard, that you have to be very sure when you buy. So do analyze yourself before buying and take into account your risk appetite, because the market cap is low and the equity is low for the company. So if you buy and then want to get out of it, it would be extremely difficult. Although company has produced very good ROE, ROCE, and profit growth up till now, but the last quarter has been an aberration. They also provide construction machinery and logistic supports to construction industry. So this is also a feather in their cap. Industrial supplies they also supply. So this is kind of a construction ancillary company that we are looking at around 11 12 times earnings. Looks extremely attractive. I think it can be big in few years time, yes, but you would have to take the pain. So you have to understand that companies like HIL or smaller companies, when I talk of Kilpest and Tanla when it was 3 400 crores, etc., these companies, you have, if you buy, you, it's like a 50 50 situation. You're going to lose a lot. Either you're going to lose 40 50% of your capital, or going to make good 5 6 8x return. So take that into account. Do consider that before getting into something like an HIL. The fourth in my list is an interesting one, and a disclaimer, I have this stock. In fact, the fifth one in my pick is also in my portfolio. So this is previous Denpro. This is a recent listing about 2 months back or so, and it has done extremely well on the numbers front. It is a recent listing and only player in the dentistry space. So they provide all kind of products for clinical as well as for commercial use, etc., in the field of dental care. And so this is an interesting company that is into a completely different domain. It is the only player listed. There is no peer comparison available for such a company, but it has shown strong growth over the last 2 3 years, and this is before listing. The numbers have been pretty good. We are waiting for the first numbers after listing that would come on the 8th, but I'm confident the numbers should continue to be good in a very interesting niche space it is. The only issue with the company is, and this is a huge issue, and I came to know about it after I invested into the stock, and I'll still stay invested at the moment. We'll look at results. Promoter salary is a huge issue. The similar to what remained with Frontier Springs promoter. So here also the salary is around 25-26% of the profitability, which is huge. So this is a concern. Otherwise, another point here is that the, you can say, lot size is around 1600 shares, so you cannot buy less than 1600 shares at a time. So that's around 5 lakh rupees that you would have to spend to buy one lot of the share. So there are issues, but the numbers are such that you cannot say that the company has any flaws in it. A debt free company with 50% profit growth, it has shown on the bottom line, 20-25% top line growth consistently. So that's why we'll look at numbers, and if the numbers are good, we'll keep on holding, and let's see what happens in the next quarter and so on and so forth. So overall the company as a business is doing well, but the lot size issue and the issue with the promoter salary is a concern in that respect. The fifth in my list is Somany Home Innovation. Now, this is a company that I have been holding for the last 3-4 months. I've looked at it in detail, and it is producing very good numbers. And the promoters or the management is very confident for a 25-30%, even more, 30 to 35% revenue growth. So the profit growth will be even better. Remember that this was part of HSIL about a year back, and it got demerged, etc. And now the value is coming in. So demerger has helped to create value for the ceramic, etc. business here, home improvement. A newly created entity, it provides a number of home improvement products, and these are smart products. These are AI products which are really selling in the market, that those types of microwaves, or you can say electric cooktops, in which you can set timers for cooking, and or washing machines in which you can set timers for washing, etc. So a lot of products that they are selling at the moment: kitchen assemblers, chimneys, you have dishwashers, air coolers, water and air purifiers, refrigerators, etc. Many of the smart kind of all those white good products are being sold by Somany Home. I think the margins will remain strong, and once the economy opens up, which is starting to do, I think from FY23 onwards, numbers would be extremely good. So all products are covered with IoT and state of the art technology. The market cap of the company has gone up to 3000 crores. When I made the presentation, it was around 2200 crores. It has swelled to around 3,300 crores, but I think it can be 12-13,000 crores market cap company over the next 4 years or so. So this was a video on the 5 of the best, in my opinion, Diwali picks that I wanted to bring to you. Some have risk attached to it, so kindly do consult your financial advisor and do take due diligence before investing into them. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. And kindly do subscribe to Patreon. Thanks a lot.